RSI hidden divergence is an extremely powerful indicator that keeps me from getting trapped. It's the main indicator I use every single day, and it's helped me keep a win rate of 80%. If I'm looking to go long on a breakout trade, I want to know, is there enough energy to sustain a breakout before I enter? Hidden divergence tells me if there's enough energy left for continuation before I enter so I don't get trapped. Now, let's look at our settings. I use RSI on a 5-period length, and I'm looking at the 15-minute chart for entries. You can use the 30-minute and the 1-hour charts for higher time frame context. Now let's look at how to use RSI hidden divergence. Remember, we're looking at hidden divergence, not regular divergence. So what hidden divergence tells me is there potential energy stored up for a move? If I'm looking to go long, is there enough energy to sustain a breakout? It does not tell me when to enter. You still have to add this to, if I'm looking to go long over the pre-market highs, I'm still need a trade signal for the entry. I don't just enter just because there is bullish hidden divergence. Basically, it adds a positive variable to a trade setup that you're already watching, or it can tell you this is likely to get trapped. It can tell you to not enter a trade. After I'm in a trade, it can also tell me, is this price getting exhausted? Is it likely to pull back, or is there energy left for continuation all the way to new highs into the close? That's how you want to use hidden divergence. It's not a trade signal by itself. So let's look at how to find this, and specifically let's look at bullish hidden divergence. First thing you want to do when you're starting to look at hidden divergence is look at your general price structure. Is it trending up? Is it sideways? Is it trending down? Then I want to find some reference points. I'm going to use these kind of lows in price and these lows in RSI, and then I'm going to draw my trend to the next kind of area of structure here. The main thing is I'm going to find my next reference point on RSI, and I'm going to see, is this trending lower? And so far it is. You can even see you have to have at least 2 reference points here, 2 different lows. So for bullish hidden divergence, you are only focused on the lows, the troughs of the RSI, and the lows of price. So you can see the larger trend here continues. Every higher low on price is a lower low on RSI. That is bullish hidden divergence. Those two things are showing that even though price is higher, there's plenty of energy. If I want to make an entry here on a breakout, it tells me that it is likely to be successful. It's likely to continue. It's not going to get me trapped. So now I've got my trend drawn on both of these. I can see that there is bullish hidden divergence. So now I know in the pre-market, before the open has even happened, this is a high probability breakout trade that I can feel comfortable entering here. I can potentially add size because I have RSI hidden divergence. That's how you want to use this hidden divergence, as a increased confidence on a trade, and a positive variable in your trade checklist. We can look at another example here on Nvidia. We're always going to start with the same thing. I'm just going to get an idea. What is price generally doing? Overall here in the pre-market, it is trending up. So a lot of times you'd say, okay, it's made a strong move. It's made a pretty big trend move already in the pre-market. Is this going to have enough energy for a successful breakout attempt, or is it exhausted? So what do we want to do? We want to look at what RSI hidden divergence tells us. So find some reference points here. I'm just going to start with this low on RSI. Then I'm going to find the next reference point here. I'm going to go ahead and look at the trend. It's already telling me that price is more oversold down here at a much higher price. So these are my reference points on price. I'm going to draw my structure. Trending up. Price is trending up. RSI is getting more oversold. If you're getting more oversold at a much higher price, that is a very bullish hidden divergence. It tells you there's plenty of energy left, and you can even see this continue to get more and more oversold and stronger divergence into the open. So this tells me if I want to take an entry here through the pre-market highs, there is enough energy for this to break out. It is not going to get me trapped. Now, after I've taken an entry, the next thing I might want to know is, okay, how long should I hold my partial trims? Maybe I take some partials here into a target. Now I've got runners. How long should I hold them? We're pulling back here. Is this price about to reverse? Should I cut the rest? Should I hold these partials? RSI hidden divergence can also tell me intraday, after I'm in a trade, is there enough energy for this to continue to trend all day long? You can do the same thing on your first pullback. That gives you your reference point. You look at RSI here, you draw your structure, and then I'm going to look here. We're continuing to develop hidden divergence intraday. Price is moving higher. We're still getting more oversold. This this tells me that on these pullbacks, we're still likely to be able to continue higher. So I need to hold my runners. I can try to sell at high of day into the close. Okay, so now let's look at some bearish examples. How do we look at hidden divergence in a bearish context? One, if we're looking to short, is there bearish divergence? Is there energy for continuation lower? Or if we see bearish divergence that tells us do not go long, and that's more likely to get trapped. So here's a bearish example. First, we're going to start with our reference points. We're kind of looking at the peaks on bearish hidden divergence. You're concerned only with the peaks in price here, and then also peaks of RSI, all right? So these are what you're focused on. And then I'm going to draw a trend. So generally like this, as price is getting lower or making lower highs, what is RSI doing? It's actually getting more overbought. If you're getting more overbought at a lower price, that's very bearish. That means that you do not likely have energy for continuation higher. In fact, you could also use this if you're looking to go short. If you're getting bearish divergence, hidden divergence into resistance, that's a very good indication that this is going to reject. You could use this as a short entry on a turn off of resistance. Any of these times that tells you can go short off of resistance for a rejection. It also tells you if you're trying to take a breakout over 323 for coin, you do not want to be entering here. Price is very bearish. There's not much energy left. It's likely to trap or be rejected. We even came back to this. If you're thinking about going long the next day, you think, okay, it's tested 323 multiple times. Surely this time it's going to be able to break out and hold. What does RSI say? RSI is making a new high at the same price here. That's bearish hidden divergence. Again, tells you there's no way this is going to make it through. That's very likely to get trapped. So you can avoid longs there. And again, you can go short off of resistance for a nice rejection trade here. Frontside short, rejected, trended all day long, down closed at the lows. Now it's important to remember as you're looking at this on your own, if there's not a clear structure, if you're not seeing what this structure looks like for bearish, lower highs on price and higher highs on RSI, if it's just messy, if it's not clean or there's no clear structure, that just means that it's neutral. So that just does not add any positive or negative variable to your trades. They're not always going to be one or the other. So that's how I use RSI hidden divergence. Add this to your trading and never get trapped again.